everybody. Luke Gromen, founder and president of FFTT, Forest for the Trees. Glad to see everyone here again. Hope everyone had a great weekend. Coming to you live today again from the sunny and beautiful Rock and Roll Hall of Fame city, Cleveland, Ohio, after being in London last week. A couple things here as we jump right into two things that grabbed my attention recently. The first, something that I retweeted over the weekend. That was a piece from Bank of America Merrill Lynch noting that German stocks relative to U.S. stocks were trading at 50-year low valuations. You know, I noted two things. Number one, that last two times the chart hit that level, which was 1970 and 1999, gold and commodities both outperformed massively in the ensuing 8 or 9 years, and also the dollar underperformed massively in both of those prior instances. I think it's important, one other thing to note, that both of those instances of this divergence, if you will, came right before major changes in the global currency system. 1971, of course, Nixon closed the gold window, ending the U.S. Bretton Woods system, or the U.S. dollar-centric Bretton Woods system. And then 1999, the euro was launched, and that made significant changes that, for sake of brevity, we won't get into here. But bottom line, the Europeans stopped recycling recycling U.S. deficits by buying treasuries in the requisite amounts after the euro was launched. And so the point here is not to say that this necessarily means that the dollar is set to underperform massively imminently. I think it depends on your time horizon. However, a lot of what we see on Twitter, and FinTwit, and on CNBC, etc., is what's going to happen in the next week, the next 2 weeks, the next month. What this chart and this tweet really show are that if your time horizon is not next month, next quarter, you're really at very historic levels in terms of the discrepancy between U.S. and German stocks, in terms of commodities versus financial assets, and probably, we think, very close to historic changes in the global currency system. So that was the first one. The second thing was, the stories over the weekend that Russia shifted $100 billion of FX reserves into euro and yuan out of treasuries. And it's very interesting. On one level, this is not surprising. We have seen the Russia's holdings of treasuries drop from, in 2013, call it 150 billion to basically zero. But in the last year, from about 100 billion or 85 billion to basically zero. What really caught me about it was two things. Number one, there was a pretty good effort by a number of, what we'll call very serious people in the economics world to talk about and sort of justify, explain away what Russia was doing. Well, this was, they didn't actually sell. They just moved jurisdictions. So this stuff's sitting in the Caymans now, but they still hold the treasuries. And what this tells you is, no, they're not. And I think that that's important for two things. So the second thing is potentially the reason it's important is everyone's very focused, rightfully so, on how much of this was because of Russian attempts to preempt any further U.S. sanctions. And I think that's a very valid point. However, there is still very little press being given to Russia selling oil in yuan, buying gold, buying yuan reserves and euro reserves. To me, all of those things, this move is a very clear sign that sort of an alternative to the dollar system is clearly gaining traction, and it ties back into the first thing that grabbed my attention recently, really. And so, to me, it's just another milepost or signpost. So I will leave it at that and open it up for questions. Let me see. Hi, Marco. Hopefully, if it froze, I think it might just be on your side. I'm still talking, but I will open it up for questions. I would be remiss if I didn't point out right next to me over here. We just released our first book, Mr. X Interviews, Volume 1. Certainly been tweeting about it. If you haven't had a chance to check it out on Amazon, please do. I've gotten a number of good reviews. It's a lot of fun to write. Already working on Volume 2 for those of you asking, and the plan is to have that out later in 2019. So I will tell Mr. X he said hello. So let me know what other questions you have. I'm going to stay on for maybe 8 or 10 minutes and then get jumping, and we'll go from there. Well, it was a little bit later start time. I apologize, but I had to watch the one good football game this weekend. The rest of them were all blowouts. Hi, Michael. Deeper reason behind the shutdown. It's interesting you asked that. I was actually just saying that to my wife. Someone had tweeted about that earlier in a discussion or something, and I thought it was a really interesting point potentially, which is, what if it's not about the wall? What if it's about something bigger? And to me, it's an interesting thought process. I think in part because, look, I understand the debate over the wall, and so I'm not saying this from a political standpoint. What I am saying is it's $5 billion. Like it's I haven't done the math in my head. It's probably what we pay China in interest in like 16 hours. So to me, it does speak to perhaps something else going on. Certainly that it's the longest ever, over $5 billion. It's quite curious. So then again, who knows? It could simply be as simple as Trump's a very divisive figure, and this is their chance to feel like they can make him look badly, and we'll see. Let's see. Media isn't speaking about the yuan oil because if they are an arm of the current dollar system, I do think no one's talking about the yuan oil side of this equation. I think part of it is, is sort of, it's just not something you talk about. But I think part of it too is it's really a different lens. We wrote in the Tree Rings recently was, the Roman Catholic Church got astronomy wrong for a long, long time because they assumed they had a geocentric model. The Earth was the center of the solar system, and even in the face of evidence to the contrary, it was not popular to point out the truth. And there's something similar here where there's this, other system. And by the way, it's another system that has been in place for much of prior millennia up until the last 71 years, which is to say a balance of payments-centric currency system. And it's developing, and so there's just, it's just not something people want to talk about right now. But I think, as with a lot of things, sort of the 100th monkey effect, if you will, right? Once you get to the 100th monkey, then sort of, back up here. The 100th monkey effect for the uninitiated is there's a story where they go to an island, there's monkeys on it, and once the 100th monkey starts to use tools, they all start to use tools. We're not at the 100th monkey yet on the oil contract, but it's gaining traction. A year ago at this time, people were laughing at it. They're not laughing now. Let me see here. Let me see if I can scroll up here on the... If gold is the new monetary system, will we stick with national fiat currencies, crypto? Hi, Roger. I think the way to... What appears to be happening is gold is moving back into the global financial system as a reserve asset. That, I think, is undeniable. And the reason I say that is you can see global central banks buying gold and selling treasuries. I do not think gold, we're going back to a fixed price gold standard, or that, we'll be carrying around gold coins, or that gold will phase out, the dollar or the euro, the yen, yuan, the pound, etc. What I do think is that gold is being moved in as a reserve asset and will be used as a reference point to all of those currencies based on those currencies or those nations' balance of payments, based on those nations' relative energy import needs / desires. And so it'll be a neutral, part of some sort of neutral settlement asset. I would point you to read up on John Keynes' Bancor, BANCOR proposal at Bretton Woods. I'm going to take a drink of water here, excuse me. During the original Bretton Woods conference, as sort of what gold could look like in some sort of new system. Hi Doug, what odds do you give for the Fed printing and odds for a gold / dollar reset? I think the odds for the Fed reversing itself as soon as later this year, and if not early next year, are very high. But I also, what I'm watching for that are gauges on the real economy. So, the ECRI, you're seeing the data weaken very much here in the U.S. remember, the Fed said they're going to be data dependent. The data don't look good, and it's started overseas and it's here now. So, it is very interesting that, to me, it seems as if consensus remains that the Fed is going to, as we've put it, bomb inside the wire. Maybe Powell changed that 10 days ago or so. We think that was maybe the first move in that direction, but those are the odds of that. Gold dollar reset. We've said over and over, I don't think gold is a real market. It hasn't been a real market since at least 2013, and likely won't be a market until it's a real market again. And when that happens, it's likely going to be tied to a political decision, not dissimilar to what we saw in 71 or 1933. Hi, Marco. What are your opinion? What's my opinion on the health of U.S. equities? I think the fundamentals are deteriorating. I think margins in U.S. corporates have been significantly helped by the trade deals we've had in place over the past 20 years overall, and specifically, if you look at what corporate margins did as a percent of GDP after China entered the WTO, if those deals are going to be breaking down, it would suggest that corporate margins may have a long way to go down. And so from a fundamental standpoint, I don't think it looks all that great. I think from a flows and from a currency standpoint, the bottom line to me is unless the dollar is weakened significantly this year, I don't think the outlook is very good. Let me see. Hi, Tony. Comment on mass uprisings, yellow vests, please. Look, I think the yellow vests, are interesting in two fronts, or most interesting to me on two fronts. Number one, they appear to be a continuation of what we've seen with Brexit, what we saw with Trump, what we thought we're going to see with the French election 2 years ago, and then it kind of faded after Macron. It's back. That's one. The second thing is, to me, when you look at the demands of the yellow vests, when you look at some of the street interviews of the yellow vests, and I tweeted something about this last week, there is this criticism, explicit and implicit, of the monetary system and of central banks that is very sophisticated, that is very elegant, is sort of, I wouldn't say uniquely French, but obviously in the late 60s, the French were very instrumental in voicing their displeasure with the currency system then. So there appears to be an understanding amongst the yellow vests that doesn't exist in the United States, that it is not, in the U.S. it's the Democrats' fault if you're Republican, it's the Republicans' fault if you're a Democrat, and it's not. It's the currency system. It's the currency system. And these yellow vests seem to realize that, and that is very interesting to me. Let's see, halfway through Mr. X, really enjoying it. Thank you very much. I'm glad you. Thank you for buying it. I'm really glad you're enjoying it. Rich, what is the best investment form to own gold? In my opinion, it's physical bullion coins held out of the system. That's my opinion of it. Let's see. Can I scroll down here? New comments. There we go. Okay, perfect. Okay, if we can expect a dollar devaluation / gold revalue as a transition to a new currency system, why not now? It's a political decision. It's at a point where if it happened tomorrow, I wouldn't be surprised. If it happened in 5 years, I wouldn't be surprised. 10 years, I'd be surprised if it takes that long. But they have, they've done the system has done a great job of kind of holding the pieces together, and there's a lot of leverage to pull. Let's see. Yeah, yellow vests are showing that the plebes are getting better educated, better organized. Yeah, I think, to me, the internet is like Gutenberg's printing press, for good and for bad. And to the extent that you want to learn about what's going on, you can obviously learn a lot. And so, to me, I'm optimistic that the internet will, like Gutenberg's printing press, lead to a renaissance of sorts. But it can also lead to some disruptions on the way there, as we're seeing. Enrico, hello. Do you think energy stocks, companies without debt, could also be a way to play on dollars fall? I do, and I think your point about companies without debt is very important. Only because timing is uncertain. Ideally, if you knew exactly when the timing was going to come, you would, the day before you really saw, the dollar, a decision on the dollar to devalue the dollar made, the day before, you would want to buy extremely highly indebted commodity companies if you had perfect information. However, the challenge is no one's going to have perfect information, and if you don't, the highly indebted companies could go bust before while you're waiting for it. But ultimately, I think a more balance of payment centric system means the U.S. has to consume less and produce more of its own consumption, and obviously energy, commodities, etc. I think would do well under that type of scenario. Hi, Mike. How far do I think the dollar would need to go down to compensate? I don't think the dollar is currently priced in the right zip code. I think ultimately 30% that Ray Dalio talked about is probably a starting point. That would get you back to, call it, the low 70s. I think at 60 on the DXY or 55. Look, the United States would be competing very, very well. Wages would be rising notably. We would be able to reduce the real value of debt outstanding in a manner that would increase the sustainability of the system, help GDP growth, help social cohesion, etc. It would be a win-win-win for everybody, except if you have too much of your net worth tied up in treasury bonds at a fixed rate. Let's see, a couple more questions here and then I'm going to jump. Marco, do you think at some point gold futures will be restructured? Ultimately, you probably need some sort of restructuring of that system, whether that is restrictions on leverage. I think would be how you would manage that, probably, so that you can only lever physical, what you would lever a modestly levered commercial bank. That would certainly work, but you would probably need to that would or some sort of exactly, some sort of rules on how much has to be physically reserved. Exactly. As you said there, at least 50% need to be held on physical. Whether 50% is the right number or not, obviously you get it. So that is you would probably need some sort of restructuring to get the before gold or after some sort of political announcement for gold to serve its role. The issue is that if you can create unlimited gold liabilities, you can control the price, particularly if those are cash settled liabilities. We've seen that in the gold market for a long time, and we saw that front and center in Bitcoin last year. So with that, I am going to jump. I appreciate everybody joining me for tonight, and we will see you hopefully next Sunday night. In the meantime, everybody have a great week, and look forward to chatting with you then. Take care.